Hello, everyone. This is Coach Sean, the Realtor, going above and beyond to help you find your dream home. Excited that you took a moment just to begin to view this video, and I hope that it's helping you and giving you some tips in your quest to become a homeowner, or even if you're looking to sell. I plan to do videos even in that capacity also. And so today I want to talk for a few moments about how to qualify for a mortgage. Just as a plug, I do these videos. I try to do them on Mondays. So if you've come on, please like and subscribe if you're on YouTube. If you're watching on Facebook, please go to my Facebook page and like it. I like my page. It helps to provide more information for more people to have this kind of information, to be well informed when they're trying to actually buy a home. Additionally, I want to make sure that I'm giving you relevant content, because sometimes I may have the right intent. My intent is to actually give you information so that you can be well informed and know the process, so that when you go through it, you don't run into some of the bumps that maybe I've run into and other people have run to before because I didn't have the right information. So I have the right intent of trying to give you that, but I may not have the right content. Sometimes the content may not be specifically to where you are. So if you can email me, which is sean.aldridge@exprealty.com. If you would even just send me, inbox me questions, or even write under this chat some questions or some videos you would like for me to do, and information that you want, or even give me a call personally. I would love to kind of provide that content for you so that I can make sure that I'm assisting you in what you need in order to be successful and move towards home ownership. Okay, what I want to talk to today is about what do I need to qualify for a loan. One of the first questions that comes about from this is where in the world do I start? Where do I start, and who do I talk to? I know that I can get a loan, but who do I get the loan from? They're kind of, there's several prime areas, but there's two primary really you can look at. There's the banks, your traditional banks that you have out there. I mean, whatever bank you bank with, you can say the Chase, the Wells Fargo's. But sometimes the downside to using banks is that a lot of times they have limited options. And a lot of times, unless you have, if you have borderline credit, or unless you have like A1 credit, then some of the programs that are actually used, and the programs that can get you, assistance, or get you a better, how do I say it? Better rates sometime also, are not always available. And so what I found is that in those situations, maybe it doesn't have all the options, but for some people, banks do work. And so that's why I wouldn't tell you not to go through a bank. I mean, if you have a relationship with your bank and you qualify and you go through, yes. But the other option is actually going through a mortgage broker. A lot of times mortgage brokers have access to a lot more programs. And what they can do is they can get your information and begin to shop your loan to different lenders to find out what best fits you. So often they have different credit requirements, and they're a lot less stringent in their credit requirements. And so when you're putting that together, it helps because they can shop your loan, get you the best interest rates, get you, if you need the down payment assistance programs and you qualify for them, they have all these different things that are available for you. So that's the advantage of a mortgage broker. I want to remind you of the four types of loans that are out there. And I'm going to do a video maybe more specifically on this. You have the FHA, which a lot of times has a lower credit score, which you can get in at like a 580, or if you have a large down payment, sometimes you can get in even in the low 500s. But you'll pay a higher down payment, a lot of times a higher interest rate. Conventional, which is asking for a higher credit score. A lot of times you come in there at maybe like starting at a 620, and then the other two are similar, but they have different things. In the VA loan, if you're a veteran, there are perks and there are things out there for you to help you get a home. So with a VA loan can help you. In the USDA, VA, you don't have to pay any money down with the right information. USDA, the same thing, except it's in more rural areas, and you would put that address into a system and they can find out if you don't have to pay money down on that. So 4 things they're going to want to know about for you to qualify for the loan. They're going to want to know credit score. We already talked about the FHA and the conventional. They're going to know about your job history. Now, here's your job history. They want to make sure that you have 2 consecutive years in the same field. Notice I did not say the same job. If you are in the same field, for instance, I have background in social services. So I've worked as a case manager. I've worked as a behavioral health program coach. I've worked as a program director, and even in education, those things will go in. So if you're in that same field and they see those 2 consecutive years, then it helps you to be able to get a loan. They're going to look at your income because they're going to figure out how much do you qualify for. And so some of the things they want to see are assets. They want to see, okay, they'll look at your 401k. They'll look at a good thing that you can have, even if you have a side hustle that you're using. They'll look at commissions. They'll look at overtime. If you from the military, they'll look at military benefits, alimony, child support payments. So a lot of times when you're trying to get a loan, a lot of times you can ask a specific lender to give you this information because they vary. They want to see a certain amount of money that you have in the bank that's sitting there, and that's because they recognize even if you may get down payment assistance or you may not, depending on if you qualify, and depending on even the realtor who negotiates whatever it is, they want to see that you have down payment money and closing costs a lot of times in there. I want you to understand this too. A lot of times in that area, we wonder if I have it. A lot of times, and most times, they will allow you to receive gifts for those. They have their specific reasons and their specific criteria of how it goes about. I believe a lot of times it goes through a letter, but if a family member wants to give you a gift, then that can help. They're going to need also some documents, and there's some documents that are needed. I want you to recognize these are the kind of the documents you're going to need to be able to go into it. You're going to need 2 years of your W-2s, 2 years tax returns, 2 years bank statements. I'm going to say it again. 2 years W-2s, 2 years tax returns, 2 years bank statements. Here's what happens. There's a difference, and I want to go into this right now because when you're going in there, what they're going to do is they're going to give you, you need to have a pre-approval letter. That pre-approval letter, once they have analyzed all your financials, that pre-approval letter shows how much they're going to give you and loan you. So Mr. Aldrich, based on how we have analyzed your financial situation, we will loan you $200,000. Why is that important? Because when you're putting in an offer on a home, you must have you should have a pre-approval letter. In this market where there are multiple offers, in this market where there's literally bidding wars and most prices and most homes are actually going way above asking price, you have to have a pre-approval letter. Most times you should not, and I would say all times, you should not even go home shopping without that letter because you cannot put an offer in. And in this market, you need to be able to have that pre-approval letter right then. And it gives you a gauge on what you should get, because with the pre-approval letter, if you get caught up and you went out before you got it and you got caught and you get so tied up and enamored with this one property that's $150,000, but when it comes back, they say we're only going to give you $100,000. That changes the ball game. You need to know it gives you direction of where you're going. So a pre-approval letter. Now there's a difference between pre-approval and pre-qualified. Pre-qualified means they've pre-qualified you based on some of the information they've seen, but there's still some documents that they've asked for that you haven't given. And so it doesn't mean, it makes your offer not look as well too when you put the offer out, because people are going to look and say, no, this is pre-qualified. They haven't gone through with all the documents and given all the information they're supposed to have. And so they're going to look at that. They're going to look at your debt to income ratio. And I believe next week I'm going to kind of do something, a short video on debt to income ratio, because what they want that ratio to be around 43%. And it shows them how much you're kind of able to afford. So they're going to show you that kind of information, but it gives them an indication of how you're able to afford. And they're looking at your gross income based on the debt that you have. And then they have a system where I'll do a really short video. It'll probably be my video for next week, because you want to make sure you understand that. And I'll add maybe some more information about the FHA, the conventional, and kind of some of the things they're looking for that. But this is what they're looking for as lenders. Now, another video we'll do later is once you get in there, you put an offer in, and when you put that offer in and you win the bid, you go through what's called underwriting, and they dig deeper even into the process of analyzing to make sure that that loan is going to go through. But for now, if you want to get it home, I would suggest to some people, make sure you get those documents together. Have those W-2s, have those tax returns, have those bank statements. Make sure you have those things. Start getting them together now so that when you need to, and you need to get pre-approved, you get those. Get your debt down. and I'm going to give you information about what debt ratios look like, but get your debt down. For some people, save for a larger down payment. It doesn't mean that you can't get it with a lower down payment, because some people think you need to have 20% down. Now, that 20% actually, and I didn't mean to go into this in this video, but that 20% actually makes you avoid having to pay what's called PMI. I believe it's called private mortgage insurance. It's the extra that you have to pay because lenders want to make sure they have insurance on it if you default on their loan, and it gives them money that you're paying out of your pocket. Whereas if you have it, you have that 20%, you don't. But you don't need 20% down. Most times, even with conventional, and sometimes conventionals can go to 3% at times, and most FHAs are 3.5% that you have to pay. But you want to make sure that you're informed on these things. Make sure you have all your documents, save for a down payment, cut your debt. And what you want to do is you want to build towards home ownership. Again, if you have any questions, please feel free to reach out to me. If you want more videos and you have ideas and topics that you want me to talk about, please inbox me, email me. If you click on the link below, you'll find my website, you'll find my Facebook, you'll find even where you can search properties. Because some of you all right now, you just want to see what's out there. Not that you know what your pre-approval will be for, but you maybe want to see the properties. And on my website, you can find those properties and you can search those and it'll give you information. So again, I'm Coach Sean, the realtor, hoping that I can go above and beyond to help you find your next home, but more importantly, want to put information out there so you'll understand this process. And when you go through it, it can make it as smooth as possible. I want to thank you for watching this video. Thank you for tuning in. I appreciate you. And as always, God bless. Bye-bye.